Good morning all, this is the COT data video for the week beginning the 11th of March 2024. Before I talk about the COT, we just need to be aware about the retail sentiment, and we're very heavily skewed. That's not an understatement, that's actually a fact. We are incredibly skewed on a hell of a lot of currency pairs. GU, for example, 94% short, AC 95, UJ 91% long. Everyone's bullish UJ for some reason. EC is skewed. Euro Swiss is skewed. The Euro Czech is, but no one ever trades that. The Euro Pound is also very skewed. Yeah, look, Pound CAD, Pound Swiss, Kiwi CAD. Yeah, even these dollar pairs are crazy as well. See, we have to look at SEC because it's part of the Dixie, so that's of note. They're long, they're so long, dollar SEC. So just to be aware, before we talk about the bank positioning, is that we're incredibly skewed on the retail sentiment, which is not that normal. We shouldn't ever be one extreme or one extreme. We should be sort of like veering between like normal parameters like 20% or 80%, which is the Pareto principle. We shouldn't go beyond those extremes, and we have on nearly, well, I'd say probably 80% of these currency pairs. We're very, very extreme, and I think what's happening is that they're holding, and they've got terrible risk management, and they could be adding as well. So just a heads up before we talk about the COT data, we're incredibly skewed on market sentiment from the retail perspective. Okay, so when we look at pound, that might explain some of the moves that we're seeing. I guess it's like the chicken or the egg. Is it the COT data or the retail sentiment? But I'll show you the pound in a second. The euro ticked higher, 62 to 66. And the dollar has moved from 1,500 to 3,000. So it increased quite a bit, from where we were. What is that? A 1,500 increase and like a 4,000 increase. So it's more of an increase on the euro than the dollar. I'll show you yen. And the yen's going to be extreme on the retail sentiment as well, no doubt. This broke that low, so this could have theoretically been a trap. You've got to be really, really careful. Whenever something breaks highs or lows, it can indicate a bit of a trap mechanic. So we've come from 132 to 118, so it's quite an increase there. Increase and increase. So the euro, yen, and the dollar have all increased. So let's take the euro off, and we'll show you Aussie. Aussie is in decline from 79 to 84, so it's already below zero, and it's further away from zero. They've actually increased their bearish bets, which is interesting if you think about it. The Aussie is a very traditional risk on or risk off currency. So if this is going to go and been sold by the banks, then that kind of might be indicative that the stocks might follow. Or we just have a breakdown on correlation. We can see how the yen and the Aussie are correlating, so that itself is weird. So perhaps Aussie is losing some of its risky charm, so we have to be quite careful here. We might just see a breakdown of correlations, maybe because of this. We've got incredibly skewed, so got to be careful. And then we'll take on Aussie off, pound on, and the pound's really surged. Now remember, there's 33,000 lots short versus 2,000 lots long, so there's heavily short this market. And look at that. Okay, so it's going to be very, very painful for the retail guys, potentially, but we are very, very, very skewed. We can't get to 100% short. It's just that it wouldn't be normal. So we've got to be careful about this. I think we may even break this high. We can see we made a lower high and a lower low, and then we had a big breakdown, and it looked like it was really tumbling, and it pumped, BOE pump, and then we got the buy set up because we had the pound crossing over the dollar there. So be careful. Even though this says buy here, we're incredibly extreme on the retail sentiment. So it's quite tricky. CAD, we had quite a reaction after zero. And down we come. So where have we come from? It might not be easy to show you. Alright, so we did go just, no we didn't. Yeah, what? Just minus 1,300 to nearly 20,000. So it's a big dump on CAD, massive dump. So be careful there. CAD off, and gold's probably going to pump. And we did pump quite a bit. 141 and to 191. So the banks are definitely looking into buys on gold, and we already were bullish because we're above the zero line, and anything really are buying opportunities if we're above the zero line, and we've really pumped. We're actually higher than I thought we'd be on in price action. Let's look at the we can do it, Control F, X, A, U. So yeah, 75% short. So yeah, fairly skewed, not extreme, but quite skewed. Anything above or below 80 or 20%, I would say was extreme, and we're not quite extreme there. Okay, and so let's come back. So that's gold. Take gold off, and then we're coming to the end of the video. And that tick down 10,000 to 7,000. So slight decrease down the Kiwi. And we might get the Kiwi USD sell pending that those lines cross. So that could be a good setup for a short. And Kiwi off. And then lastly, Swiss franc, which would be sideways, no doubt. Oh, we've actually fallen a little bit. Okay, we might be breaking this range this time next week, which would be really interesting. We've just consolidated for the longest time. We may see a break of the Swiss, and that would indicate some Swiss weakness going forward. So just to recap, that we're really skewed, very extreme on a hell of a lot of pairs, and because of that it's going to impact price action, and we have to be careful at extremes because we can't go beyond 100% short or long. We just can't do it. It just wouldn't be a rational market. So we might have a bit of a crazy week. And also just to say on the spreadsheet is that we've had an increase in the open interest, and it's doubled. Right, so the total loss across all pairs on MyFX book clients is a 220,000 loss. Now that normally sits at 100,000, 115k. We've doubled. Okay, so what I'm thinking, what I just put into Discord, is that the Forex brokers are pumping out a lot of adverts, and so it's getting a lot of new clients in, and because of that, because they're new, potentially they're going to make some terrible mistakes, and then they're going to get blown up. So we're probably going to have a bit of a crazy week ahead of us due to the skew, due to the open interest, and also the COT data is indicating strength on certain currency pairs which are in agreement with the retail sentiment. So seeing big weekly changes as well. Look at these weekly changes, it's huge. Look at that one there. CAD Swiss moved to CAD Yen, sorry. CAD Yen had a really bad week. That also pumped as well. Pound CAD and the pound USD had a good week as well. So you can use the daily and weekly changes. So this is your high level, and if the daily is in agreement with the weekly, it kind of indicates that there is, the trend is there. If this is green and this is green, then there's a decent long, isn't it? Especially if the herd is really short, which they are. So they got absolutely squished last week, and they're probably going to get squished this week. So be careful and trade safely, and I'll speak to you soon. I wholeheartedly recommend fxsi.com and their indicators for MetaTrader 4 and 5. It's a 7-day free trial, so do have a look. There's no credit card required. You might be lacking in some sentiment awareness, analysis,
and it does complement technical and fundamentals very well. Especially if you're very technical, you could be missing out on some sentiment, or if you're particularly fundamental, you could be missing out on some sentiment. This is like a sweet zone. It complements both, and it gives you a very strong bias about direction as well. So technicals are great for direction, fundamentals are great for direction, but the sentiment sits in between. Okay, and so perhaps if you're missing out on some sentiment awareness, these are the best indicators in existence in the world for that. And then you can have a look at this. You've got a 7-day free trial, and you've got your order book, and you've got your indicators, including the ratios, which are amazing. Just look at my videos on my YouTube channel and you can see how powerful the ratios are. And you can have a look. Just take your time. You've got 7 days to trial them, and if you don't like them, then that's fair enough. You don't have to renew, but we do have a code if you want to, and it's just the Quasi DB code, and it gives you a 10% discount, and that's it. So have a look, see what you think. And like I said, it's a 7-day trial, so you don't have to renew, but I think you'll probably find you will renew afterwards, because the order book and the ratios and the stop loss clusters as well are amazing. The stop loss clusters are great because you know where to target. Okay, so that's where you take profit, where people get stopped out. Okay, and that's it. So just a quick plug for the fxsci.com, and enjoy your day.